Welcome to this week's edition of Stock Breakthroughs. I'm your host, Erin Beal. As you know, currently the stock market is stuck in its typical summer trench. The Dow shoots up 150 points one day and gives it all back the next day. Now, some say this pattern could continue all summer, while others warn of a slight drop over the longer term. Now, while this trend might be boring, there are still breakout opportunities lurking about. Here with us today to let us in on some of these little-known opportunities is Adam Lass, market analyst and editor of Wave Strength Options Weekly. Welcome, Adam.
Good to be here.
Adam, can you help us find some excitement in these summer doldrums?
Well, Erin, market values are awfully high right now, and the trend points to a flat run at best. I'm actually one of those summer bears that's looking forward to an upcoming drop of roughly 5%. But that doesn't mean that it's all doom and gloom throughout. To find breakouts in a market this top, you have to look at to where the weak hands are already flushed out. And right now, the biggest failure has to be real estate.
Oh, absolutely. Real estate has indeed been so ugly. I know that sales of existing homes fell for a third straight month in May, and that's the lowest level in 4 years. The median sales price has declined for the record 10th consecutive months. Now, if these results meet the forecast, housing construction will be more than 24% below last year's levels. Adam, can you confirm these numbers?
Oh, absolutely, Erin. You are absolutely correct that real estate numbers are looking downright abysmal. Inventory of unsold homes shot up to the highest level in 15 years. New homes and apartments in May fell to a seasonally adjusted annual rate of about 1.4 million units, down from 1.5 million units in April, according to the consensus estimate of Wall Street economists surveyed by Thomson IFR. That is exactly what has pushed all the air out of this particular balloon. But stand that on its head and it could be a good thing. What's left is solid and ready to rise. All this news about residential real estate has eclipsed a rather successful business real estate environment.
Well, what is going on in the business real estate environment? We're not hearing too much about that on the headlines.
Well, U.S. business continues to run on unabated. In fact, we're actually seeing hiring pick up a bit, and all these workers have to sit their bottoms somewhere. And while Macy's and J.C.Penney may be hurting a bit, upscale mall stores like Saks Fifth Avenue reported a 37.5% gain in same-store sales in May. And in early June, the preppy king, J. Crew, tripled first-quarter profits. I very much like the opportunities available in the real estate investment trusts. You know, the guys that fill up all those downtown office buildings? REITs have been extraordinarily profitable of late. This run has beat all major equity benchmarks for the 3, 5, 10, 15, 20, and 30-year periods, according to the National Association of Real Estate Investment Trusts. In 2006, REITs returned to 34.35% to investors versus the S&P 500's 15.79%.
So what's the play here, Adam? I know that a lot of investors have been weary of REITs because they've taken a hit lately. So how would you play this current boom in business real estate?
Well, for starters, I think viewers would do well picking up shares of, say, the iShares Dow Jones U.S. Real Estate Investment Trust. It's an ETF, it's the IYR, and despite the relatively good health of its constituents, it's been trading darn close to a 52-week low. Now, I can't swear to you that it won't peel off another $1 or $2 before it gets rock-solid traction, but a year from now, when it's trading back in the high 90s, I don't think anyone will care whether they bought it for 75 or 76 a share.
That's probably true, but Adam, what about the fact that ETFs are a little broad sometimes in that, they can include both winners and losers?
Well, now, if you want to get a little more boutique, you could start picking up shares of individual members of this ETF as they bottom out. I think that shares of Simon Properties, that's SPG, they look rather attractive below 90. Vornado, that's VNO for your viewers, looks like it could be had for anywhere around 100 shortly. And if you prefer something a little cheaper, Prologis, that's PLO, can be picked up right now for just over $50 a share. Now again, I'm not promising the ultimate perfect bottom here, but everyone knows how bloody your hands can get trying to catch a falling knife like this. But seriously, by the time a taxi driver is telling you about these companies on your way to the airport, it'll be too late for the best part of their coming ramp up.
Very true. Well, thanks for joining us today, Adam. We'll look forward to having you back later in the summer and to see if you've made the right call on the Dow drop and on real estate. If you'd like to learn more about Adam's Wave Strength Options weekly service, please visit www.wavestrength.com. That's it for another edition of Stock Breakthroughs. I'm Erin Beal, and I'll see you back here next week.